You just want to run across the back.
So let's talk all things news. What's all the commotion with GameStop or Games? Oh my days, GameStop. And which other companies are set to trend the same way? Let's sprinkle the facts, guys. So, tongue twisters or what? So 2 seconds on the basics, because we like to keep it simple here and KISS. But just in case you have been living under a rock for the past week, short selling has been wreaking havoc. It's basically selling a stock you don't own. Basis of the GameStop story. Short sellers typically borrow stocks from long-term holders of stocks, and this is important to know if you delve deeper, as the RobinHooders believe they're doing a public good. They're not actually. Selling short also leaves a bit of a sour taste in the mouth, as it means the seller is expecting the stock to drop and, in the best scenario, go to zero. However, what happens when the stock goes up? Well, you're screwed a little bit, which is what we have seen this week. Who are GameStop anyway? Most people buy video games online, and that was even before the pandemic. GameStop are a mere brick and mortar retailer who have been struggling for a while, and recent tech and accessibility means that games are purchased as digital copies straight via console or PC. So when you think about it, a physical game store is soon to be a relic, really. So it makes sense that the stock will trend downwards. Now, with GameStop though, there had been some activist interest, and this is when a buyer comes into the stock and takes an active role in managing it, turn a company around. It happened with this man, Ryan Cohen, who took a position in the company. That's a cute dog, by the way. However, and there is a however, it wasn't Cohen's interest that drove the stock up, but the frenzied rally to the GameStop stock, which was caused by a coordinated buying from retail investors colluding on internet forums. Now, that has caused the stock price to rocket, called a short squeeze, as the rise in price triggers a domino effect where hedge funds are buying GameStop to close their shorts and mitigate their losses. It's all a bit of a head bang, really. Prices will always spring back though, and the regulator really hates this type of collusion. So expect brokers and forums to have their knuckles wrapped in coming weeks. Now, with GameStop understood, there are also a raft of other stocks which have been gaining interest and momentum, and it's wise for you to know who these are. The first one is Amc Entertainment. This is the world's largest cinema chain and owners of Odeon here in the UK. So for a stock that has been sideways for best part of the year, it has been bouncing up and down, and when I say up and down, 300% in one day, guys. The second one I'll talk about is American Airlines. So another one scraped off the Reddit forums is American Airlines. The travel sector has been shorted as a hedge for the pandemic. Its quantum has been closer to 10%, but it's clear that there are shorts on and being discussed. The third one is Blackberry, the stalwart of business communication and business communication devices from the start of the millennium. Well, it's now mostly a relic, really. It's been up 170% since the start of the year. Why? And Nokia, and I do love Nokias, honestly, my first love. Last week it was up 42%. Jeez, honestly. And Blockbuster. Yes, they still exist. The company that was killed by Netflix has one store left, guys. One. They were up 700% in one day last week. Guys, remember the good old Blockbuster shop, or your local video shop even? I grew up in the 90s and we lived for the Karate Kid on cassettes. The number of times I used to walk up and down the main road to get to the video shop. I have to mention these guys, Bed Bath & Beyond. Their stock traded up 43% last week on intraday news and then fell back down to 12% in after hours trading. It's just so odd. And the final one, Pearson and Cineworld. UK education and UK cinema chain. The latter, the darling of the YouTube community early on in the pandemic, was a bit of a bargain. However, as the pandemic has continued and schools remain shut and moved to online learning, both stocks are now the most shorted of London listed stocks, and so they are ones to monitor. Now, shorting will always remain a strategy used by professional money managers, and they really hate getting played like this, especially by these newbies. There's already news that tech-savvy hedge funds are scouring the forums to pick up early signals and trading indicators, but let's face it, retail investors don't really have the resources of a hedge fund, and so these arbitrage style opportunities for the sparkers. Also, stock prices are driven driven by fundamentals, and fundamentals have a habit of reasserting themselves, and so the more stretched the market becomes, the more likely a snapback becomes. And as for me, well, I'm finding the whole thing very entertaining, but keeping well away from it. I really appreciate you guys coming to the end of this video, and so have asked the YouTube algo gods to show you a video that they think you might enjoy. So see you on the next one.